Gold jumped to the highest in more than 2 weeks after Ben Bernanke backed sustained economic stimulus. Now, many thought September or December at the very latest would be the date for commencing tapering. However, at the latest meeting, Ben Bernanke took tapering off the table. Now, I have Rohit Savant from CPM Group in New York on the line. Rohit, now do you think he has been giving mixed signals, or do you think he has been pretty consistent?
Yeah, sure. I don't think his comments have necessarily been mixed. He's actually held to his comments and pretty much said that only when the economy starts showing signs of improvement, they'd pull back on monetary accommodation. I think he was a little more clear this time in stating that this is what the central bank would do, that they wouldn't cut back on monetary policy or tighten monetary policy anytime soon. I mean, the two things that they look at is the labor market and inflation, and neither of those are really the labor market really hasn't strengthened enough, and inflation isn't bad. So there's no urgency on the central bank's part to cut back on monetary policy, and I think he was a little more clear in stating that this time. How does that impact gold? Well, if and when they do take back or cut back on monetary accommodation, that's going to be negative for gold. You're typically going to see that the market kind of responds on the downside in anticipation of that cutback, which is what we saw in the last few, or rather at the end of June. So it typically would be negative for gold, largely because it would mean a strength in the US dollar. It would also suggest that all this money that's being pumped into the market, which is inflationary, would actually be sucked or would kind of decline. So there's less reason to buy an inflation hedge such as gold.
And what is demand like for gold? And looking ahead, how do you see gold performing in the short, mid and long term?
I think what you're going to see in the next few days is probably some more upside. You'll probably see that from short covering. There've been a lot of shorts been building over the last few months, and the run-up in prices that we saw overnight are likely to result in short covering. So you might see some upside potential from here. Our outlook's not necessarily positive for gold just yet. We think that once you get back to about 1350, there's potential for prices to come back down. There hasn't been a lot of physical demand out of India and China, and what really has happened is this. In April, when you saw prices come off, there was a lot of buying done in India, China, and even the rest of the world. This time around, you didn't really see that kind of strength in buying, and it's basic investor sentiment. I mean, they saw prices come off in April. That was like a 2-year low. Prices went up a little bit, and then they came right back down. So investors are now, sitting back and thinking, like, let's wait, watch, see if this goes any lower before we actually step in as buyers. And another thing that differs with April and June is that back in April, that was just ahead of the Indian marriage season. There were a couple of auspicious days in terms of festivals when Indians do gold buying. Similarly, in China, there were a few auspicious days for weddings. So that decline was very well timed. But right now, you don't have any of those, auspicious days coming up. So there's no urgency on the part of buyers in those countries to, jump in and try and buy gold. So they're just kind of waiting and seeing how much, this would decline. That's not to say that there isn't demand. It's just not as strong as it was back in April.
And silver headed for the best streak since February. Do you see this strength continuing in the short term?
I mean, silver typically tends to shadow gold, and what you're likely to see is similar, some strength in the short term. Probably gets back to maybe $21 to an ounce, 21, 21.50, and then backs off again. our expectation is that for the medium term, you probably see a sort of sideways move for both gold and silver. So when I say medium term, over the next year and a half to 2 years, we are expecting that, after the current volatility in prices is done, so a short-term uptick, maybe, some more decline through the end of August, and then maybe prices stabilize and, kind of move in this 1,300 to 1,450 range for gold over the next couple of years, and in the case of silver, between around, $18 to $21 over the next couple of years. So that's really a short to medium term outlook for both these metals.
And finally, platinum reached a 3-week high on the back of Ben Bernanke's latest comments. Can you tell me more about the type of patterns we are currently witnessing with platinum and palladium?
Yeah, absolutely. I mean, I think our outlook on the PGMs, so that would include both platinum as well as palladium, are actually more positive than what our outlook for gold and silver is. What we're seeing right now is just a run-up in all the precious metals. I mean, you saw the comments yesterday from the Fed chairman, and, that's just having an overall positive impact. But fundamentally, platinum and palladium both are actually pretty strong. We're actually more positive on palladium than platinum, but even platinum has good supply side fundamentals which are supportive of prices. So you still have all those issues in South Africa, which are a concern, and they're going to be an ongoing concern. And just given how concentrated mine supply for platinum is, that's definitely going to be something that's supportive for platinum prices. And I said that we're more positive on palladium because not only do you have those same supply side issues with palladium, but you also have very good fabrication demand fundamentals. So a lot of the users for palladium are actually seeing an increase. You've got good sales in the U.S. auto market. You've got good sales, healthy sales in China. And so there's a lot, and you've got tightening emission standards. So all of these things are typically positive for the PGMs. So our medium-term outlook actually for the PGMs is, for stronger prices over the next couple of years.
Thank you very much for that. Well, viewers, that is it for right now. But if you are interested in hearing about base metals, then do have a look at Elaine Sense's interview on Tuesday. Goodbye for now.